Fed President Bullard has predicted an unemployment rate of 30%. Goldman Sachs, JP Morgan, Morgan Stanley, and just about every other major bank have predicted unbelievably gloomy numbers. The expectation is that with all of the Fed bailouts and mega stimulus from government, the economy will rebound to a great degree in the third quarter. We'll see about that. You came here for the truth, so let me unveil that for you. I've been covering the situation very, very closely. If you've been watching me here on my channel, you know exactly what's going on. I'm going to bring you a huge video today, a lot to cover. Let's get into it. As I record this video, the stock futures dropped more than 4%, briefly hit the limit down as investors await stimulus agreement. Supposedly, it wasn't going to go through. They hit a barrier. They'll pass it, I'm sure. It's just a matter of one thing or another. You can see the Dow Jones futures right now, it's down 768 points. That's about 4%. And we're looking at this as it happens. By the time you're watching this, who knows what they're at. But as long as there's a stalemate going on between the Congress, this isn't going to look good. If they do pass something, if it is a big number, which it is expected to be, then of course this can go higher. But as the bad news piles on, you might see more red. I just wanted to point out something that was happening in the stock market. See, yes, it was going up the whole time. This was very, very bullish. And suddenly we had this big issue, as you know, you are aware of. All along, there's these many little buy the dips or dead cat bounces that happen over and over and over again. You have investors that try to buy it up, but the general direction is down. Don't be caught in one of these. Make sure you know where it is, where you want to be at before this really swings upward again. Australia stocks drop almost 8% as the uncertainty continues to roil markets. This is major. We're looking at it coming around the world. It's affecting every single country. Their financial markets are taking a beating as a result. We can see certain countries, Canada for instance, we're back to the levels before the financial crisis. That's how hard it's been hit. This information comes directly from the Central Bank of New Zealand. After cutting interest rates to a record low 0.25%, it looks like now they're buying $30 billion worth of bonds over the next 12 months. They are also engaging in QE just like the rest of the world. Extremely low interest rates on top of that. This is a global phenomenon we are seeing right now. This is more unprecedented than the financial crisis. The exaggeration of how this has really impacted the economy as well as the financial markets is unlike we have ever seen before. It's truly unbelievable. This is the big news. It needs to be understood by everybody. I posted about this on all of my platforms and I need this to get out there. Congress may allow the Fed to purchase longer-term corporate debt. It is said that this is going to be stuffed in there with all of the rest of what's going to be probably a bill that's 1,000 pages long. They get 20 minutes to read it, sign on the dot, hurry up. Anybody who doesn't sign on it, well, it looks bad on them. So of course they do. And meanwhile, the Fed gets more ability. They are now going to be able to buy corporate debt. What does that mean? These corporations can do whatever they want. They can take as much risk as they want. But when they run into a problem, you don't have to worry. Just issue some debt. The Federal Reserve prints money out of thin air, devaluing your currency and bailing them out. I will follow up on this issue. Of course, I will let you know. Stay tuned. Now, this is huge news here. Fed's Bullard says U.S. jobless rate may soar to 30% in the second quarter. This is coming directly from the Federal Reserve. This isn't just some analyst. This isn't a bank. We're talking about the Fed themselves. Now, of course, part of this is propaganda. They're saying that they want this to happen because they want extra power. That's what it's all about. But I do believe that we will see a higher level of unemployment. There's no doubt about it. He also expects an unprecedented 50% drop in GDP. That would be huge. This is a planned, organized, partial shutdown of the U.S. economy in the second quarter. The overall goal is to keep everyone, households and businesses, whole. With the support from the government, it's a huge shock, and we're trying to cope with it and keep it under control. They're doing everything that they're able to do. They maximized it all the way to municipal bonds. They're buying debt all along along the entire spectrum. They're bailing out anything and everything. They did QE4, they now introduce QE5. It could very well be that they go and buy the corporate debt. There's only one thing left, and that's stocks. This is covering the same information, but I just want to touch on a couple points. Fed's Bullard shutdown is not a recession, but an investment in survival. He argues that a potential $2.5 trillion hit coming to the economy is both necessary and manageable if officials move fast and keep it simple. There must be massive federal government support, he says, to sustain the population through its coming isolation and prime the economy to pick up where it left off. This would be very, very big. We're looking at a massive package. I'll talk more about that in a second. I did on previous videos and on all of my platforms today and yesterday. There's some big news coming out. The worst of the global sell-off isn't here yet, banks and investors warn. I've got a bunch of charts here from this Wall Street Journal article. Check this out. What history tells us, the stock market hasn't fallen yet as much as it did during the financial crisis or the aftermath of the bursting of the dot-com bubble. You can see right at the top here, 2020 looks like just over 30%. Back in 2008, it was not quite 60%. 2001 was close to 50%. This is the S&P 500 specifically. It depends on what you invest in. If you had a particular stock, that stock might have dropped by 70%. Who knows? In today's case, of course, we have a lot of people buying ETFs. This is going to be big, bad news for those trying to sell, particularly at the worst moment when everybody's trying to rush to the exits. Fiscal failure, the S&P 500 continued to fall after fiscal stimulus programs in 2001 and 2008. I want to make that very clear. You could see where they point to these sections, and it still had a long way to go on the way down from the point at which they decided to bring in their stimulus and the actual bottoming of the market. Just because they introduce something, a new TARP bailout, doesn't mean that the market is going to rocket from that point on. Usually, it does help the markets out. It does help the economy out, even if it's short-lived. But that doesn't signal the bottom. Cracks in the economy, the number of Americans who applied for first-time unemployment benefits jumped as companies began laying off workers. This is going to get much worse when we look at the newer numbers, but here you can see on the chart, it's already spiking, and that's definitely not a good sign. How low can you go? A number of analysts think that the stock market still has a long way to go before it bottoms out for the year. The S&P 500, depending if you're looking at Credit Suisse, Goldman Sachs, Bank of America, it gets worse and worse as you move down. Many have predicted below 2,000. There's heavy resistance above that 2,000 mark, 2,100 or so. If it breaks through that, well, the technical analysis is definitely not good. So we'll see what happens. Now, the Treasury Secretary had something to give all of those in the US. Some good news coming out. Let's take a look. Financing programs for businesses hit by the current issue we're facing could amount to $4 trillion, according to the little munchkin. $4 trillion. This thing keeps getting bigger every time I open the news. We'll see what the final number is, but it just keeps getting bigger every day. Goldman Sachs, we expect a sharp decline in second quarter S&P 500 earnings. This is massive when you look at what they are expecting. I have no idea what's going to actually happen. Usually their estimates are completely off anyway, especially with so much uncertainty. But the second quarter looks to be terrible. Third quarter looks to be getting better as we move into the fourth quarter. Things start to look positive. I'm not so sure what's going to happen here. There's always this expectation of things are going to be better next quarter. This quarter's not so good, but hang in there. They always do this. They do the same thing for GDP estimates and so on. I don't believe any of it. There's a lot of data on here, but just look what's on the right-hand side. Morgan Stanley, U.S. Economic Outlook quarterly growth profile. Can you believe this? Minus 30%. That's what they're expecting the real GDP to be. I'm not sure if that's the case, but that is huge. Now, of course, they expect a huge rebound afterwards, which I'm not so sure of. It's this V-shaped recovery that we keep hearing about, but I don't expect that to be the case at all. I think it will take some time. Things will start to come back online. They have this silly expectation that nothing's going to break along the way. Not sure why they believe that, but maybe they have something invested there. Could be. Morgan Stanley, we expect the unemployment rate to average 12.8% in the second quarter of 2020. This is huge. And we're talking about the U3 unemployment rate. Global economy in recession in 2020. These are the numbers right here from Morgan Stanley. There's a range. Like I said, I don't like to take any of these in and believe that this is what's going to happen because this bank said it or that bank said it. But when you start to see a bunch of them going in one direction, we can pull from that and just take it with a grain of salt. You don't need to worry about Boeing though, they are fantastic according to Goldman Sachs. Goldman makes bold upgrade of Boeing shares saying it has enough cash and air travel will return. Could this have anything to do with that $4 trillion package? Maybe Boeing is going to get some of that money. Maybe Boeing is going to get nationalized. It might have something to do with the fact that Goldman Sachs and the government are tied together at the hip. But that's me just talking. Corporate earnings are about to do something they haven't done since the 2008 financial crisis turned negative. Everything is going down right now. First quarter 2020 looking bad. Second quarter 2020 looking much worse. I'll be tracking all the progress here on the channel. Stay tuned. This article out of Bloomberg is talking about the commercial property market freezing. Take a look at this quote. There's downward pressure on every aspect of every asset class. There are massive question marks right now in just about every aspect of the financial industry. So it's becoming very difficult to know what the future has in store. And that's where you get that downward pressure. This chart here shows you a breakdown of all the different actions that the Federal Reserve has taken since February 28. It's broken down very clearly. You can either pause the video or go to the sources. I have it there. You need to know all of that which is happening. I've been covering basically all of it, but definitely stay on top of it. That's all for this video. If you found it informative, hit that thumbs up button. All you gotta do to support me is click one button. Every single day, I've been creating content on Instagram and Twitter, giving you updates faster than I can. Even though I post every single day, sometimes even twice a day on this channel, I provide content even faster there. So definitely check me out at The Money GPS. If you want to learn how to sell online, you're interested in it, you just want to know about it, don't go out there and buy a course that people charge $1,000, $2,000. Check me out at the Amazon GPS. It's free. The financial system is convoluted, it's confusing. I talked all about what's happening right now in these two books. The conditions were just absolutely ripe for destruction. These two books give you all you need to know. Check the link in the description. If you want the audiobook, themoneyGPS.com. I have this playlist for you. It's called How To and Solutions. There's so much in here that you need to check out. Click it. I'll see you there.